The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, folks, we're going to take a look at the crude oil market. We were watching it yesterday when it was making its bottom, and the first chart that I posted in here is the three drive to a bottom pattern, where you have the ABCD pattern forming with the D point being the last point of the third drive. This is a very, very excellent pattern. It probably works about 80% of the time. The problem is the 20% of the time that it doesn't work. Look out. And that usually means that the D leg will go beyond the 1.618 level. In this particular instance, we made a perfect 1.27. It took an hour and a half for this to to complete. But during that time, the heating oil, which was something we were also watching, we'll get to that chart in just a minute because I think we've reached a critical level here. The heating oil dropped another 4 cents. It went from 116 down to 112 during the time that crude oil had already started to rally. So they were sort of taking turns, and gasoline had held up well. It had backed off to the 786 retracement, like Mr. Z pointed out yesterday. And now, we rallied $2.50 so far in the crude oil, which is an 8% rally, believe it or not, given the fact that how beaten up this market is. Yeah, and so we'll see, what's going to happen. What I'm going to do is I'm just trying to show you that when a complex is making a bottom, and I'm not saying that it is a bottom yet, it's just that it's got a chance to do it from these levels. That's all we're watching, because that'll give you a good chance to see if you can actually get in at a relatively cheap price if you're able to do that. Now, if we take a look at the heating oil, you'll notice that the number we were looking at yesterday was the 112.50, and that's what we hit. That was the low in the heating oil. We rallied all the way up to 119 and change today. So we rallied 7 cents in heating oil off the bottom. So we have to pay attention to this, folks. This is something that I think is very, very important to us. And if we go and look at the work that was done by don't tell me I've missed it. Oh, no. Oh, darn, I put the seasonal work and I can't find it. Oh, well, I'll find it eventually. I don't know what. There it is. Just have to be a little more patient, and then you will be. I need to be a doctor. I'd have to have more patience. Hold on a second here. We'll put up the this chart that's just seasonal, and you'll see that there's of all the months, the December is the best month for a seasonal bottom, in crude oil. And boy, we've had a monster bear market. It matched the one, the one in 2009 went from 144 down to 33, and this one went from 114 down to 33. So it's very, very close, but it's still the one of 2008 was worse. Now, part of the problem that has happened with this collapsing oil is the junk bond market has basically gotten hammered really badly, and it's really under a great. Well, we posted this yesterday to show you what it looked like. So it's telling you that we've got some problems over in the credit market at this particular time. Now, one of our den listeners sent me a real interesting chart that showed the interest rate market from 1796 right after us, 20 years after our country started to the present day. And it basically made the comment that the period from 1970 through 2000 was really the aberration. In other words, interest rates should be very, very low, near zero, as a matter of fact. And it showed the chart of interest rates during that time and when the spikes occurred. But folks, I don't think you can compare that chart because we are a little bit different country than we were when we had just a few million people. We've got 360 million people here now, and we live in a high-tech society where information transponds, in a matter of milliseconds. So I don't believe that chart is well, hey, it's not relevant for what we do because we're looking at trading, and we have to look at what we have for the daily charts and what we have for the hourly charts and even the weekly charts. So I can't use that chart as an example. Now that might be right, but on a long-term time scale, things have changed so much that you really can't do that. That'd be like comparing whale oil, which was the way they lighted the lamps and stuff, back in those days, and then the kerosene lamps came out when John Rockefeller brought in the oil. So this is I just don't think you can make that comparison. So getting back to the junk bonds. The junk bonds have been hit badly because the price of oil. Many of these junk bonds are related to the oil market. Now, there's been a big flack about one of the junk bond funds has stopped redemptions, which means you can't get your money back. This one I don't understand, but it's amazing that the fellow that running that junk bond used to be with Bear Stearns. And he had some problems at Bear Stearns with one of his funds when it was going down, and now he's got this other one. So he hasn't got a very good a reputation, I guess, but he had quite a bit of money in there. I don't quite understand it. If you have any questions, you can just go in and look in that junk bond fund and see who it is. And there's a whole story behind it, and so you want to be really careful. You've got to do your homework, folks, when you're doing these investings in these ETFs. And boy, I tell you, I really don't understand these ETFs. I look at them all the time, and boy, some of them are just absolute ripoffs. The ETF for cow, COW, boy, that's just it doesn't have anything to do with the live cattle market. I mean, they are so much different that it's like fly poop and pepper. I mean, it's just really a huge difference. It's like you have to, when you remember, folks, when you're doing your investing, you got to think like, in the land of the blind man, the man with one eye is king. So make sure you have one eye open when you're looking at this stuff. You've got to do the work yourself. Don't listen to me or John or Tom. Nobody. Take the responsibility for yourself. Do what Jim Twentyman said, and that is defy human nature. Do the work yourself and do your homework on this. And I think you'll be far better off. Now, the market made a beautiful bottom yesterday. We were expecting a bottom. If you were looking at the market for the E-mini S&P, it made a perfect ABCD pattern down there at the 1984 level. At that time, we were making a perfect 61% retracement in the New York Stock Exchange Index. Everything was just lining up for a really good rally. Now, how long this rally is going to last, I'm not sure. It could be the beginning of the Santa Claus rally. We'll have to wait and see. But we need to get the S&P up around the 2050 level. And remember, we've come 40 points. Actually, more. We've come 50. Let me see. 20. Yeah, we've come 40 points off the bottom already in just a matter of a few hours. So that's telling us that we've got some, we might have some more to go as far as what we're looking at with the, with the S&P into the rallying mode. That's what I would be watching at. Now, the NASDAQ also went down and hit a nice low. We rallied over 120 points in the NASDAQ in a matter of about 10 or 12 hours, which is a huge move. And that's also telling us that we're pretty close to that spot that is going to be a major bottom. Now, the one thing we do know is that if the market is really good here, it's not going to get lower than we were yesterday. So if we go below 1984 now in the S&P, now we're looking at something that could be, really, really seriously wrong. So we want to watch that, very, very closely. It's a big spot. There's no question to watch that, because it is really an important spot because of the timing that's involved. It's a very big astro date that came in on December the 14th. And so we want to watch that, extremely, very, very closely. That's the bottom line of what we're looking at when we're watching some of these things that we're keeping our eye on. We've had a couple questions about the grain markets. I said before, and I'll say it again, we're still in a downtrend in these things. Wheat, corn, and beans are still, heading lower. Wheat has been the best of the group, but frankly, I think we have to wait and see, what happens with the remainder of the year here, because this is a really quiet time for grain movement. First of all, the grain sales, because of the Christmas holidays, they're not shipped usually till after the first of the year. So we want to watch this after the first of the year, because we've got a chance for a long-term bottom here in some of these commodities. So it's a very interesting thing. I actually was listening to a webinar yesterday by my good friend Larry Williams down in the Virgin Islands, and he was saying that he was also looking for a potential, major bottom forming in the some of these things, and he thought that it could be starting with the crude oil. He had not said that was the bottom yet or not, but you'll have to wait and see. The one thing we want to watch on crude, in fact, it just happened just a few minutes ago, and it's just very small because it's only about 80 ticks in the crude oil. But we did come down, and we made a 382 retracement of the move that we had yesterday. We rallied $2.50 a barrel, and then we came down $1 a barrel in a matter of about 3 or 4 hours, and that stopped right at the 382 level at $36 a barrel. So makes that a minor bottom now in crude at the $36 per barrel level. So I would keep that, watch that, because if we start rallying here, folks, the news is so bearish on oil that and markets go up for lack of selling as much as anything else. So we have to really watch it very, very closely. We want to try to, to get in. I, got a little bit of it yesterday, but we'll see. I haven't made I'm just a little cautious here because of the strength of this downtrend, but the patterns are beginning to tell me. What I'll be watching for is I'd like to see a 3-day rally, 3 to 4 day rally, maybe even 5-day rally in crude oil, and then watch the first retracement back, because that would probably give us a really nice Gartley pattern. And from that spot, that's the one that I would really like to be looking for. We had that same Gartley in the New York Stock Exchange Index yesterday. We had it in the S&P 500. We had it in the Dow Jones. Okay, we're going to take a little break here, and we'll be right back after these few words from our sponsors.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. service. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at this neural network chart that Larry Edelson has published. If you'll notice this green line, it is the forecast. And we got this in, I got this around the 2nd or 3rd of November, I believe, or second week in November. I don't remember exact date that someone sent it to me. But this thing has been following perfectly. We bottomed right on that bottom down at that 1045 level. Our target, of course, was 1050. We rallied up to 1085. And the day that we rallied up, that was in 2 days, within 2 days of that high that he had marked there. He's got that marked as a high of December 15th. If this is correct, we should be down for 2 more weeks into early January, and then we should start, a pretty big move here in the gold market. Now, what's interesting, the way gold has been trading, after we hit the 1085, we backed off about $15. Actually, backed off $20, and we rallied up. And each time the market rallied, it stopped exactly at the 786 retracement or the 61% retracement. And we did exactly the same thing today. The 1068 level was exactly the retracement of the last $14 move to the downside. That was perfect 61% retracement. So that basically forms a trend line from the 1085 level down to the high today, which is 1068. So if we can get the market to move about $7 or $8 higher today, that would break out those series of trend lines, and then you could get maybe a thrust of gold higher into today, if that is the possibility. So we want to watch that very, very closely. Longer term, I still like gold. And I love silver. I probably get more emails about the buying silver rounds than anything that I do, and I just love silver coins. They're beautiful numismatic coins. I think they're pretty, and value-wise, I've held them for years. I've sold some on the way up and stuff, but I've always bought them back when they came down. So that's the main thing that I'm looking at. The problem that we're having in these markets, folks, is the debt market. I don't think it has anything to do with these financial markets, like the stock market. I don't think it really has anything to do with that. I think it's all related to what's going to happen to the bond market when they finally realize that it's been smoking mirrors there for so long, and it's been that way across all the countries. Now, there's also the possibility that I mentioned earlier, that this premise that interest rates, the aberration is really from 1970 to 2000. That 30-year period out of 300 years is, that's what really occurs, and that interest rates should be low at all times. I don't believe that because of the speculative nature of people. That's just not gonna happen. And then the other reason is, why do they call them junk bonds? I mean, they used to call them, back in the years of the 70s, they were junk bonds. And then when Milken came to work for Drexel in 72, he basically changed the format from calling them junk bonds to high yield bonds. And the reason for that was these young companies, they couldn't borrow money at any price. They really couldn't. This is before credit cards, if you remember. And they just literally couldn't get money. So the only way they could do this was to float this paper known as junk bonds. Some of it was junk. I mean, it was no good. But some of these bonds actually turned around and made companies do pretty good. And that's what you're looking at. So we'll see. Okay. Someone just posted that their favorite coin in the series is the Morgan silver dollars, which I certainly love those two. I love the Morgans, and I love the Eagles too. But I just think they're the Liberties. I think they're beautiful coins no matter what, and they're good history too. And you can buy a 100-year-old silver coin. I mean, a beautiful one from, say 1919, 1920, 1896. You can get some of these coins that are absolutely beautiful in mint condition, MS60. In other words, basically uncirculated coins, and you can buy those for under $25. And I think those are really beautiful value. And that's just your kids should have some no matter what, because they're just not going to see those again. Back in my old days at Drexel, when gold was going nuts, I bought a complete set of gold coins for my kids, including the $4 gold piece, which now is quite rare. And they have all the, they have the St. Gaudens, they have the Liberty in the $20, I have the Indians in the $10, and the $5, 2.5 ones, and the $4 piece. So they're really beautiful coins, but they're historical pieces, no question about it. Okay, we'll take a little break. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the Treasury notes and Treasury bonds. We went down, and a few days ago, as you can see, we didn't gap down, but we spiked down in the Treasury notes, and then we had the snapback rally. Now, we've done the same thing in the Treasury bonds. The difference is the Treasury bonds went up and hit the 61% retracement up there at that 157 level one more time. And let's try that again, Larry. 156 level one more time, and now they're starting to back off a little bit. Now tomorrow is the scheduled day for the Federal Reserve supposedly making their idea of whether they're going to do the rate cut. I hope they do, because the market will most probably view that as bullish, and maybe it could be, but we'll just have to wait and see what's going to happen. The interesting thing that we're watching from my perspective is how much we're going to rally here from the in the stock index futures, because of that big Gartley that we hit yesterday was pretty much spot on. From a cycle standpoint, folks, if we go below that 1084 level, there's very little hope for this puppy on the upside. So, protect yourself if you possibly can. Now, yesterday we were also looking at that the E-mini, excuse me, and I'll stop it, Larry. The IWM, we went down a little bit lower than that. We went down to just right above the 786 yesterday, and we'll see see if that held. But it's held so far, and that's the real cycle low that we have. The December 14th is just a key date, so we want to watch that. But it's not as key date as the one we had on December 4th when the market started to roll over. That's the real key date. That's when we were at 2104 in the S&P. So we want to watch the fib number between 2104 and 1984. So we got 120 points down. We could easily rally back 61% retracement, which would be 70 points up, and that would take us up to around 2050. If we get above 2050 in the S&P, and remember, we've already covered, we've covered 30-some, we've covered 30-some points already, and 35 points already. So if we get above that 2050 level in a few days, that will tell us that we've got a shot at even taking out the 2100. I don't think that'll happen, but that's the key. The reason why I say that is the December 4th date was far more important from a cycle standpoint than the date that we had on December 14th. So we'll follow it day by day and see what transpires with this. There was a interesting comment made to me by someone through email here from the den about how the stocks of Google and these other stocks have controlled the market. Well, we've been saying that for a very, very long time, because if you look at the overall Dow Jones and the NASDAQ and the S&P, you've got about 150 stocks out of the 8,000 or so that are listed here in the United States that are actually causing all of this move. The rest of the stocks are really in very, very weak, and the broadening or the breadth of the market is very, very weak. Every time the market goes down, it does it on increasing volume, and that's also not very good. But anyway, the Federal Reserve will do what they want to do, but the Fed funds rate has already told us that we are looking at higher rates. It's just a question of when they decide, to get off the bandwagon and let everybody, see what's looking at. We're going to show this Fed funds rate contract again, just to show you that rates have already started moving on the downside. Or rates have already started to go up. And that's the key thing that we'll be looking at. And I don't believe it'll be the first. I don't believe it'll be the first interest rate or the last interest rate cut. I believe there's going to be a whole bunch of them. But this is historical stuff, folks. We've never gone this in the history of our country. We've never gone 6 years without an interest rate increase, and we've never had quantitative easing before. And both of those things I don't understand. We used to have a beautiful 4.5-year cycle. That quantitative easing is totally skewed. Maybe it's taken it away. I don't know. There's a possibility of that, I guess. But the bullish bias that we had yesterday is certainly carrying over to the to the move. Someone's asked me a question if I've ever been to the Mint. Yes, I have. In 1968, when we had the redemption of silver certificates, the Denver Mint was one of the places where you had to bring in your silver certificates to get your silver. And if you would have been there, you would have. It was a time in history. I'm sure there's pictures of it, but there were people lined up around the block at the Denver Mint to collect their silver, and they had little dollies and stuff to carry out the bullion and stuff. And of course, I was there, and with a couple of my fraternity brothers, because we had been heavily involved in buying silver certificates, and we had about 20 grand in silver certificates to pick up the silver. And of course, we were armed. We had our own weapons and everything. And of course, in Colorado at that time, you didn't have to have any type of licensing or anything. And everybody in that line was also carrying some type of a weapon just for safety. I mean, it was crazy, but that's neither here nor there. But we picked up our silver, and then we drove it back to Indiana. And I was living in California at the time, but we really had a lot of fun doing it. But I've been to 3 mints. I saw the mint in New Orleans before it went out, and then I've been at the mint in Denver and also the San Francisco mint. So it's really something. Well, I don't want to get into the numismatic stuff, but I was lucky at Drexel. I had 3 of the largest coin dealers on the West Coast as my customers. I did hedging for them for gold and silver, and also did spec business too. But I did get involved into the numismatic. The most important numismatic thing I ever was involved in was Laverne Redfield. He was a man that lived in Carson City, Nevada, and he is the one that had the most incredible collection in the world. Steve Markoff bought it for, I think, $6 million back in, I think it was 75 or 76. I don't remember the exact year, but one bag of silver coins, 1,000 coins in the bag. Each coin was worth 25 grand. That was $2.5 million right there. Anyway, that's about what we're looking at right now. So we got the market opening here. We'll see how much stronger we're being everywhere. We'll take a look at this. Uh-oh, guess what? We cannot see the wow, we're strengthening good. We're up 200 and some in the Dow. This is what we want to see. We want to see this market, rallying really strongly. And that's the real beauty of what we're trying to see here. And we'll see what's continuing to go on. My electronic beeper is going off, so I've got a trade out, and it's making. I've got to take it off because I can't. I've made a profit, and I can't find the toggle switch. Stop the front door. What is beeping? Doggone it. Give me 1 second, folks. I'm sorry to do this to you, but I've got to do the. Oh boy, this is really strange. I don't know what's caused this. Well, I'm in between a rock and a hard place. There's nothing else I can do because finally did it. Hold on, there we go. Okay, I was short the euro, and it's hitting my my profit objective now. So I wanted to take that off. Okay. One other question. Someone asked me about the Apple. Apple, it was downgraded yesterday, and at the same thing, it's rallied relatively good, coming off their, they put it on their restricted list, or Morgan Stanley did something. I don't know what, what the darn thing was, but all I was doing in the euro, folks, is the euro made a beautiful ABCD pattern up there at the 110.50 level, and now it's dropped 80 pips. So this is something that I was hoping would happen. But you just never know for sure that is what is going to happen. You just can't do that. So we'll see what's happening with this, and we will go from the next one here. And the next question was about I already answered the question about the grain markets. We covered that. Okay, that's the bottom line. Okay, one other thing that we want to look at here, and then I will be right back with you. I'm trying to make sure this order is correct, because if I mess it up, then I'm going to not be a happy camper, and I want to make sure that I've got it working here, and I don't know where it is. Oh, dear. Oh, dear. Well, I'll tell you, folks, when you have technical stuff that doesn't work, you're between a rock and a hard place, so I'm not going... Now I've really done it. Shucks. There we go. Okay, now we're in business. Okay. All right, we've had a pretty big run here in some of these things here. We had a big run in the NASDAQ after it opened in the first 15 minutes. We're coming up to some minor resistance at 2040 in the S&P futures, but I think that's all that is going to be. in my opinion. But again, that's my opinion, and we have to wait and see. Now, there is something else that's happened here since we've been talking. Is the crude oil market has now made a 60% retracement of the move that we had from 3 or 4 days ago when we got up to 39 and change. We made a 61% retracement of that move already today, and we just hit that. So if oil is no good, and I'm not saying that it is good, but if it is no good, we've now rallied $3 a barrel. We've rallied almost 10% in oil in a matter of hours, and now we're up against that 37.40 level. So if we get much above 38, folks, this thing is going to be riding the old cart towards the finish line. In other words, that bottom could certainly be in already. And now I've lost data. Oh, this is really good. So this is just terrific. Everything is sticking. Oh dear, this is not good. I've got a frozen machine now. Hope everybody can hear me, so I'll just have to wing it. But oh, no prices coming in. This is nice. That's what I love to hear. Got to love it. Well, I'm just going to have to wing it. There's nothing else I can do. My machine is frozen, so I'm going to have to, well, I've only got a little bit of time to talk. But the fact that we've come off of this bottom yesterday so strongly suggests that's a major bottom, folks. So it's going to be pretty easy, because if you go below that 10 or 1984 level in the S&P now, you're going to be looking at something really nasty. And on the upside, we're looking, somewhere around the 2040 level to see if that's going to be, some type of a 20. Actually, it's 2050 is the real level. 2040 to 2050. Those are the two levels that I'm watching here for this. So keep in mind. I don't have any prices. Could someone upgrade me on what Jan crude oil is doing, please? The last price I have is 37.22, and we'll see what 37.11. Okay, thank you very much. I just wanted to see if it got much above the 37.30 level. Was the exact 61% retracement. I don't know what the high was, but that was the 61% retracement, and I'm dead in the water for the prices. I just don't have anything at all that we're making. I'm just not getting data, so I shouldn't comment. I'll just be quiet to see what's going on. Okay. All right, so it did hit a high of 37.75, so we did get above it by quite a bit. So that tells me that the crude oil is most probably getting ready to, move. 37 was a high, so that was the number. If we get above there, then we're looking at. Thank you for the prices, folks. I appreciate that, and I was able to take care of the euro trade, but I wanted to. See what else we had here. Boy, it's really tough when you don't have prices, and I am frozen like a deer in the headlights. Boy, my machine is just totally frozen up. I just can't. Frustrating as heck. That's one of the tough parts about doing a radio show in the midst of the first hour of trading. That's not a good thing. So might have to change some of these things about the timing, but we'll wait and see. I'm going through my questions that I have. The question about the relationship between the German DAX and the S&P, that still is very, very tight. I mean, when the S&P goes down, the DAX goes down, and when the S&P goes up, the DAX goes up. The DAX is the German version of the S&P 500, but it has a margin requirement of 21,000 euros, because it's a really big one. Each tick is worth $25, and boy, it moves 10 ticks like the blink of an eye, or 20 ticks. It moves $500 in a flash. So you got to be really careful if you trade that here in the U.S. Over in the U.S., in the U.K., you can change your contract size, but you can't do that here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Folks, I've been asked to show this. I was able to pull this up because I did get my data back. I wanted to show you the crude oil because someone's asked me the question, how did I come up with that number of 37.29? All I did was I took the high from several days ago, and that was at 39 and change, and then the market came down to 34.55, and now it's rallied up to the 61% retracement at that 37.29 level. The high was 37.38. So that tells us that if we can get above this level around 3,800, then you've got a chance for crude oil to have one heck of a rally. We've already rallied 10% in a matter of about 20 or 30 hours, a little more, yeah, probably 30 hours or so. So there's a possibility, and we've hit the bottoms in the other one too, the heating oil, and then also in the gasoline. So just keep an eye on it. And the thing is, if you'll notice on this chart that the pullback that we had today, we had $1 a barrel pullback, stopped right at the 382 retracement at 36.13. So, keep that in mind. But don't keep your eye off the ball on the long-term stuff. That long-term chart of the New York Stock Exchange Index, it tells us we're going down. We were down 7 days. We're snapping back really rapidly, which you get this happening all the time in bear markets. So you want to keep an eye on it, because this is the key point to be watching when you're following these things. So they get to be quite crazy at times, but this market is still very, very bearish. It's done nothing to prove to me that it's bullish with the lower tops and lower bottoms on that New York Stock Exchange Index, the declining breadth, all of that. Now, we did have a good bottom yesterday. There's no question about that, and we can profit from that, of course. But we want to be careful here, because when we go below the lows of 1984 in the S&P futures, that's the March futures, then I think you're going to be looking at a market that's going to be, going down quite a bit. We'll see what happens. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.